What is up, everyone? Stan here from ApexBull.com, and my buddy Diamond Hands and I will explain to you what's happening with Bitcoin and money. Let's dive in. So briefly, I want to mention a few things about the trading world that you should be aware of. First of all, the dollar looked like it's peaking based on the bond performance, meaning that the ultra hawkish Fed is being priced in, has been priced in already. Now, what does that mean? Well, that means that the risk assets that were selling off, like stock indices and Bitcoin, which are very highly correlated, were getting hammered. And for the last 2 weeks, I've been making videos explaining to you why you should go long those aforementioned stock indices, and hopefully you listened to me and you made some money. People who are subscribed to ApexBull Signals definitely made a killing going long stock indices when everything would look like it was falling apart. Now, what do I think? Why should you care about all of this? Well, because stock indices for the last 2 weeks have been bouncing. Now with Bitcoin has been compressing in a range. Basically think of it like a spring that you put pressure on and you coil it. As the spring coils, it stops at a certain point. You can't squeeze it anymore. And then when you let go, the potential energy gets released. And this is what happens in the stock market. All that pent up energy in Bitcoin right now will get into a very, very big, powerful move to come very soon. So in this video, I want to show you what to look for signs, when exactly that will start happening, and how to enter that particular signal as it's happening, so you can make a fortune on it, honestly. And if it doesn't happen and something else happens, which we will also mention, let's say Bitcoin goes down, you're not going to be in trouble by buying something where there's no confirmation. So in this video, I'm going to show you how Wall Street professionals enter those specific trades and how you can literally make millions of dollars doing exactly the same thing. All right, me and my buddy Diamond Hands are going to take a look and see what's happening with Bitcoin and tell you exactly how you can enter long positions and what to do if market starts breaking down. Overall, in this video, I will show you what's been happening and what's about to happen and how to take advantage of what's about to happen. So let's dive into some charts. So this is the chart of daily Bitcoin. So as you can see, we've been going down, down, down. We bottomed sometime in mid-May. And since the mid-May, we've been essentially for the whole month already, have been just trading in this range right here. Now, what does it tell you? What does it tell us about what's about to happen? Like I've mentioned before, when you have a coiled up, pent up energy stored for a prolonged period of time, at some point it gets released. And when it gets released, you will see a huge move reminiscent of something like this one. You had this downward but sideways chop fest. Then we took out this support trend line, and then the cascading effect and waterfall of a price action happened. Now, Bitcoin loves to do that. It loves doing the range thing and then a very prolonged, sustained move up or down. So even here, we've been in range, and then bam, down. Range, here, up. So, like I said, what this thing is telling us a few things. Number one thing it's telling us is the fact that we are about to make a huge move, because we've been consolidating in a range market for about like I said, almost a month. We are approaching a trend line here. Let me actually, it's different on different. This was the measured move that I was targeting when I was saying to buy here. It didn't get as high, but it still got pretty close, So not bad. I'm still long Bitcoin. Why? Well, because until we take out this range, it's just being in a range. So if you bought somewhere here next to lows, you can hold them unless you see a daily close below this level. But the interesting part is we are approaching this key trend line. And let me actually draw it a little like that. As you can see, maybe a day or another day or two, and we can definitely see a big move coming. Now, so how do you make money without entering long right now? What you should wait for is a confirmation. That's the safest way of entering. If you have a close above this point here, so you have a close like that, a little bit of a pullback, maybe retest this trend line here, and continuation. That would be the ideal type A scenario, type of price action, evident of bullish momentum continuation. So let me show you what you do. You can, if you want to be aggressive, you can buy for example, you have a candle like this, right here. You have a candle. Sorry, this is me drawing candles. So you have one giant candle. You can buy the break when the next day, if we take out that candle's top, you can put your stop somewhere here in the middle of the range, or preferably below the range lows as your stop loss, and target at least 1-to-1, 2-to-1, whatever you want, or hodl. But you're going to be definitely in profit. So maybe take some half off and then put your stops at break even and enjoy the ride. So I think we can definitely retest the underneath of this trend line that coincides with 618 retracement. Definitely a possibility. So something like this here, and then we'll see. Maybe it'll roll over, maybe it'll go up. I don't know. We'll judge the price action later on. Now, another option is to make it a conservative entry. A conservative entry is you see a few days of up movement, and then you see a pullback because people who actually were buying, accumulating all the way down here, like me, we will take profit once we see a little breakout. We will take some profit, some money off the table, and when that happens, you will see a pullback. Once you have that pullback, a lot of people who missed the initial move will want to jump in on the next wave 3 move, which is going to be the more powerful one. And that's where you come in. You can buy it right here. You see a little bit of a retracement. As soon as you see it bouncing, that's when you pounce on the opportunity. That's when you go long. You can go heavy and put your stops. In this case, you can actually put your stops much tighter. So somewhere here, for example, because if it starts continuing, it will go. The problem with this conservative method, as I've mentioned before, crypto loves to just move. So when it moves, like it happened with this candle, after this candle right here, you can see we never breached the previous candle's high until all the way down here. This was the first one after this massive sell-off. So what you can see is this thing just takes off and goes. That's why maybe you want to enter half of your position on the initial breakout, and then add more on if the conservative scenario happens. And if not, then at least you have a half running, still make plenty of money because the move is going to be impulsive, powerful, and it will deliver. Now, what if this bullish scenario does not happen? Okay, well, first of all, you're not going to be in a bullish, you're not going to be holding anything until you see the breakout. But nobody knows. Nobody in this world knows whether or not this thing is going to take off. As a professional on Wall Street for 20 years, I'm telling you, the only thing you know after a consolidation like this, after a huge consolidation like that, all you know that the big move is coming. Get ready, strap on. And that's exactly what we're doing here. we are anticipating and building scenarios, and whatever price will do, that's how we will react to it. Not hopium and schmopium or whatever crack you're smoking. It doesn't matter, right? What you have to work with concrete things that are tangible knowledge, so to speak, in trading. That a lot of people just talk nonsense, honestly. So that's why I don't want to tell you definitely buy 100%. It's going to the moon like this guy here. Sorry, but you have to just be ready for both scenarios. So the second scenario is obviously it will be a bearish one, but you would need it will be a very hard trade to take, to be honest, because you will have a close here. It can be a fake out and then return, because then this will become a range. So for a short side, I wouldn't short it. I would just wait. If it actually goes and it goes quick, obviously we're going to be retesting the 2000 whatever those highs from 2017, 18, whatever the fuck it was. 17, yeah, December 17, right? This was the previous all-time high right here, and and we obviously made a pit stop before we rallied. So if this is just another bear flag type of scenario, and after the breakdown we're gonna target these lows, maybe you could try shorts, maybe, but I would rather just wait and buy somewhere around this area. So that's obviously, again, don't leave an order there, because it can go down a little more and then go up. So what you do is you see whenever it will stop bleeding, right? That's when you enter right here. So yes, you're not going to be at the absolute bottom, but you will enter on a slight uptick, move up. You start seeing that, okay, bullish momentum, that at least they're trying. Let me try too. Your stop just gets below this point right here, and if it takes off big, and you make money. But if you're wrong, you long only a little bit. Instead of just buying, most people do this. The price keeps going down. Oh, this is too far. Let me buy here. 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 And it just, why? Why are you committing so much capital for nonsense? So instead of committing all this capital, just wait for the bounce. You will see, and this thing loves to give you those signals. Look at when this bottom right here, right? Look at this candle right here. Look at this tail. Same thing right here. Look at this tail, right? On the top side, tail right here. Tails right here. You can analyze the market. Obviously, the big dead giveaway is this one right here. So and that's why we've been consolidating after for a month already. So let me clean this up. Don't buy levels. Don't leave an order like an idiot that all the exchanges and all the big money whales see, and then they run through those things just to stop you out or do some damage to your account. Don't do that. Be a professional. What professionals do, they leave orders, a stop order. So I want to see something to go down, start bouncing. I'm going to leave an order for a stop. So once it starts bouncing up, actually, that's when I'm gonna get into the long. Yes, I'm not gonna be at the bottom, but I have confirmation that at least there is some bullish momentum is coming, and there's a probability that a big move is coming. While when it just keeps going down, there is no probability. There is probability that it's gonna go up and reverse, but it's very, very low. You don't know when it's gonna start bleeding, right? So you don't want to be caught in that. In any case, as always, if you like the content, please like, subscribe, because if you like this content, then the like and subscription will make the algo send it out to other people who might find it useful. So if this information makes you money, please like, please subscribe, leave a comment, and you're more than welcome to stop by a free Telegram group link in the description. Hope it helps. Enjoy.